Okay, let's talk about Alibaba. It's a name we all know, right? A true global tech giant. But here's the thing. Behind that household name, there's this massive puzzle that has Wall Street completely split. So today, we're going to dive in and see if we can piece it together. And that puzzle really boils down to one simple question. If Alibaba is such a powerhouse, why is its stock trading so cheap? It's the strange contradiction that just doesn't seem to add up on the surface. So let's start unpacking the clues. And this chart, wow, this really lays it all out. Just look at the price to earnings ratio. It's basically what investors are willing to pay for a dollar of a company's profit. Alibaba is sitting there at just under 16. Now look at its closest global competitor, Amazon. Similar business with e-commerce and cloud. It's trading at more than double that. That's not just a small difference, that's a massive gap. It's the market screaming that it has some serious doubts about Alibaba's future.
So let's get right into it. Why the deep discount? What is the market seeing that's making it so incredibly cautious about this company? Well, when you dig into the analysis, it's almost like you're reading two completely different stories about the same company. In one version, Alibaba is a fading giant. In the other, it's got this hidden growth engine that's just waiting to take off. And honestly, the entire investment case here depends on which of those two stories you believe is true.
All right, let's jump into the financials because this is where it gets really fascinating. You can actually see both of those completely opposite stories playing out in the numbers themselves. At first glance, the picture looks pretty bleak. The company's revenue growth has basically fallen off a cliff. I mean, an 87% collapse from its peak? That is a huge flashing red flag for any investor, basically signaling that the best days are long gone. But, and this is a big but, that headline number is hiding something really important. The story on the surface isn't the whole story. The headline view? Yeah, it's a slow, boring, mature company. But if you look under the hood, you see something totally different. A cash cow e-commerce business that's basically funding this secret hyper-growth AI engine. The problem is, the market seems to be pricing the slow part and completely ignoring the fast part.
So let's break that down. No surprise here, the main China e-commerce business is the biggest piece of the pie. But look at all this other stuff. Cloud, international, logistics. These are not small side projects. They're significant parts of the business. This company is definitely not a one-trick pony.
Okay, but this slide, this is where the real story is. This is the big reveal. The core e-commerce business is growing at a decent 10%. That's fine. But look at this. Cloud intelligence is growing at 26%, and their logistics arm, Mecanio, is growing at a massive 35% year over year. That is the hidden engine we were just talking about. The smaller parts of the company are growing way, way faster.
And you can see where this is going, right? This takes us directly to the big bull case, the whole argument for why Alibaba might actually be an incredible bargain right now. It's all built around the idea that this hidden growth is about to be unleashed.
The argument really rests on three main pillars. First, the company's doing a major strategic refocus, streamlining everything to pour its attention into just two things, e-commerce and cloud plus AI. Second, that AI engine isn't just growing, it's actually speeding up. And third, management is using its mountain of cash to buy back stock and pay out dividends, which is a pretty strong signal that they think their own shares are dirt cheap. And if you need just one stat to understand the power of that AI engine, this is it. Revenue from their AI products has grown by over 100% for 8 straight quarters. That's 2 full years. This isn't a fluke, it's a powerful, sustained trend, and it's right at the heart of the entire bull argument. But of course, there's another side to this coin. So let's flip it over and look at the bear case, the very real risks that are keeping this stock so cheap in the first place. So the bears are worried about three main things. First, competition in China is just absolutely brutal. Newer companies like PDD have dragged Alibaba into a really costly price war. Second, to fight back, Alibaba's pouring money into things like quick commerce, one-hour delivery, which is just crushing their profit margins. And finally, all this is happening while the Chinese economy is struggling. You've got a property crisis, so people are saving money, not spending it. And that competitive battle has a very real price tag. Profit from the core China business, the cash cow that's supposed to fund everything else, actually fell 21% last quarter. That's the financial damage from this price war, right there in black and white. So you've got the bull case betting on a hidden AI rocket ship, and the bear case worried about a costly war at home. So how does the analysis put these two stories together to come to a verdict?
In the end, the analysis lands firmly on the bullish side. The core argument is right here in this quote. The market is just way too focused on the short-term problems and is basically ignoring this incredible long-term growth story that's happening inside the AI and cloud business.
But, and this is a big one, that bullish call comes with a huge risk, the dreaded value trap. That's the term for a stock that looks cheap, but it stays cheap or gets even cheaper because the company just can't kickstart its growth again. And with a weak economy and those endless price wars, this is a very, very real possibility for Alibaba.
So, the final recommendation is a buy with a 1 to 2 year time frame. But I want you to look very closely at the confidence level here. Medium. That word medium is critical. It's acknowledging that even though the AI story is incredibly powerful, the risks from competition and the economy are serious, and they're really unpredictable. And that leaves us with the ultimate question, doesn't it? The whole bet is that the AI engine's growth will become so massive that it just overwhelms all the problems back home. But it's a race against time. Can that engine accelerate fast enough to outrun the very real fires burning in its own backyard? That is the billion-dollar question that will decide if Alibaba is a bargain or a bust.